What's up, everyone? This is Kenny here from Property Stories. So today we're going to talk about a topic that is one of my highly requested topic, debt consolidation. With the rising cost of living and also the rising interest rate increased by 4 times since the pandemic till now, I'm sure a lot of people is suffering with their housing loan payments or with their debt obligations. So today I would like to share with you how debt consolidation can help you to reduce your debt obligation. Okay, it can reduce your monthly repayment from like 5,000 plus to 2,000, so that at least you have some cash flow to breathe and also spend on necessities. So let's get started. So first thing first, what is debt consolidation? We're going to go through terms and condition and document required, things to do before debt consolidation, process flow. I'm going to take you step by step, calculating eligibility and some FAQs. Okay, so what is debt consolidation? The first one is to take out new loan to pay off existing loan, often with lower repayment and interest. Lower repayment and interest is the key here. So example, the personal loan and credit card is paid off by a new housing loan you take. Okay, existing house loan, you consolidate. You use your house, the equity that you build, and you consolidate for personal loan and credit card. Okay. So what are the terms of condition? Documents required is nearly the same, add a few more. If no cash out, proceed as normal. If cash out, there's a 10-year stress test on cash out portion. Property must be completed. Okay, for those who have watched my refinance video and you wonder why is it the same or is it the same slide, it is the same. It's 100% the same slide. I will not go through what is the 10-year stress test in this video. Please go back to the refinance video that I did. I'll put the link down below to understand. This only applies if you cash out. Yes, you can consolidate your debt and also cash out if you have extra. Okay, so documents required, let's go through. And property also must be completed. So refinance, you will have cash in hand. Debt consolidation, you usually do not have cash in hand. Okay, so documents required: income documents, salary, employee, so copy of IC, 3 months payslip, 6 months is variable, 3 months bank statement, 6 months variable, latest EPF statement, self-employed, copy of IC, SSM. Now you just use your ESSM, right? You just download the ESSM, pass to your banker. Latest 6 months company bank statement, latest 2 years Borang B and BE with proof of payment. This is proof of payment. Let's just say you owe LHDN 500. You wait, there's 2 types of receipt. One is LHDN give you the receipt of 500 with LHDN logo. The other one, you just provide your bank transfer slip. That will do. It's counted, okay? And then most people made the mistake of just giving that acknowledgement page. One page only. Borang pengesahan penerimaan cukai. No, we want the acknowledgement page and also the whole full set. The full set here means the 7 pages that you declare. Okay, your tax relief, how you compute your tax, how much you earn from all sources of income. That is what we want. That's what the bank wants. Okay, remember, give everything. So property related documents. What is a copy of SMP, relevant pages, copy of strata or individual title? You got this, right? You don't need the SMP, but still, if I were to be the one applying, I usually will just include the SMP lah. Screenshot of latest loan account balance of the property. Yes, this is just like refinance. So details, give the full property address, including the unit number and pictures. If you want a higher value, please give the latest pictures to your bankers. Okay. So facility documents. Since debt consolidation is to settle other loans, banks will require you to furnish documents related to other facilities. Latest credit card balance or statement, and then you can screenshot. Okay. Latest higher purchase balance, screenshot. Nowadays, everything you just go to your loan account, you screenshot and send to the banker. Latest personal loan statement, or you just screenshot your latest balance. Some banks, they will put all these accounts, these loan account numbers into the offer letter before passing it to you. Okay, and in the offer letter, they will specify how much to pay which account, how much to pay which account. Then once you sign, the moment the money comes out, you will go to pay off those accounts. Some banks will even pay off and your credit card also close the account. But some, they will allow your credit cards to remain. Okay, only like things like higher purchase and personal loan, of course, it close. Then next one is your things to do before debt consolidation. Remember, ladies and gentlemen, debt consolidation only have one reason only, which is reduced commitment. Now that is the main reason you do debt consolidation. So you can concentrate also on multiple facilities to one. Imagine you have few loans, so many bad debts, then you concentrate to one, you only pay that one only. Easier for you to manage. Okay? How much you need, you must decide. What it means here that how much you need. Example, you have 2 personal loans, you have 3 credit cards. Then the banker suddenly say, okay, sir, miss, I've counted, right, that you can only consolidate this much, this amount. Example, 300,000. But you need 500,000 to consolidate all this. So maybe you can just choose some of the credit cards. You cannot take all. So that's why you must decide whether it's worth it or not. Maybe the other one you manage another way lah. Okay? So what do you want to consolidate? This one also another one. What do you want to consolidate? You have to decide. And you will notice, right, most of them don't really have housing loan. I will explain why later. Okay? You need to buy MRTA again. Yeah, MRT, yes, you need to. If you don't want to buy like full, you can do minimum lah. Okay, at least the banker see your case also. Oh yeah, got MRTA minimum. Okay lah. So you prepare your documents, then you can engage a banker or mortgage broker. Mortgage broker such as myself. If you want to check out the application, you want to apply, my links are all in the comments. Yeah, just fill in the form first. Okay, let's move on. So before that consolidation, ask yourself first, is it a completed property? Under con cannot. That means completed here means you got the keys already. You got the keys. How long has it been completed? Those that just completed, no need lah. No need to check. You got no equity built up also. That's where you just started repaying your loan. So you won't have equity and the property price won't like skyrocket. So be realistic. Make sure you are not a AKPK or bankrupt. If you AKPK or bankrupt, you cannot get any loan. No bad secrets or CITOS record. You register for e-secrets. This is free. This registration for e-secrets, it will easier for the banker or the broker to actually evaluate for you manually. Okay? You can buy a CITOS report. I think now it costs $25. If I'm not mistaken, I solo never buy it. Usually, I will just get the free CITOS report. Then for the secrets, right, I will use e-secrets so it saves money. Now, next. So example of a customer profile. Current money commitment in secrets, this customer here, you see there's a housing loan. Let me check. Okay. Housing loan here, 2,000. Current balance, 200,000. Interest per annum is 4%. Credit card, 1,000. Current balance, 20,000. 5% of 20,000 is 1,000, okay? 18% per annum. Credit card 2, 500. And then current balance is 10,000. So it's still 18%. 5% is 500. Personal loan, 1,200 a month. Current balance is 120,000, 7% per annum. Hire purchase 1,000 but current balance is 100,000. So interest rate 3% per annum. Okay, 3% per annum is lower than 4, right? But remember, all these are flat rate calculation. Flat rate. It's not reducing balance. So they all calculated upfront. So you count the effective interest, it's going to be very high. Higher than your housing loan. So assume the net income of this customer is 8,000 a month. Current DSR, debt service ratio, total commitment over total net income times 100%. So current commitment is 5,700 times 100% over 8,000, which is 71% current commitment. To consolidate all these bad debts, two credit cards, 1 personal loan, 1 hire purchase into this housing loan here. This 2,000 payment minimum a month and then with current balance of 200,000. Okay, so usually no consolidation of housing loans. You have to check your respective bank. So why does housing loan usually you got no consolidation? You notice these facilities, right? They very fast settle. Yes, hire purchase, everything all with the bank. You don't need to go to land office. You don't need to involve a lawyer. Very fast settle. That is why there's no housing loan. Okay, housing loan, if you want to consolidate, you have to involve the land office, you have to involve the lawyers, so it's going to be costly. And usually banks don't do this. So you consolidate everything except the housing loan. 20,000 plus 10,000 plus 120,000 plus 100,000, total is 250,000, okay? Let's just say the new market value of the house is 600,000. Assume max 80% versus value. So 80% times 600,000 is 480,000. Current outstanding is 200,000. Total loan to consolidate is 250,000. So you combine is 200 plus 250,000, which is 450,000. So new loan is 200,000 plus 250,000 equals to 400,000. So assume the interest rate for the mortgage is 4% per annum and 10 years, 30 years. New installment, you take the calculator, punch, new installment is RM1249. You see how big the difference is? Just now, previously was 5,700 a month. Okay? You count everything minimum, even the credit card minimum, the higher purchase, everything. Now it becomes 2,149. So really a lot difference, right? A lot difference from before and after. Okay? As a result of the debt consolidation, right? So monthly payment is reduced by 62%. Debt service ratio also reduced. Okay? Monthly total interest payable also reduced because you consolidate from high interest to low interest. Number of facilities that you need to pay every month, you need to manage also reduce from 1, 2, 3, 4 accounts, 5 accounts, including the housing loan, now become 1 account. So debt consolidation, who should go for it? People with high debts. Okay, high debts. And why you want to go is peace of mind at least, and then you also have room to breathe. You have cash flow for your necessities. So when your monthly repayment is a burden, it's going to be a burden, and you think it's going to be a burden, please do this first. Don't wait until the last minute when your cash runs out, okay? What is it? Is to consolidate multiple facilities to one. How? You can check your banker or broker. You can ask your banker or broker how to do done. And I've left a form for those who are interested to apply. I've left a form down below. You can fill in the form. So to recap, this is difference of refinance versus debt consolidation. Refinance is harder to approve, but debt consolidation is easier to approve. Why refinance is harder to approve? Remember the 10-year stress test? This is the reason why. And then remember, refinance, because you take the cash in hand, the commitment is to add to the current commitment, latest commitment. You can only exclude the facility that you want to refinance, the house that you want to refinance. For debt consolidation case, you can exclude the facility. You can exclude all the commitments, and then you make it easier for you to approve. You see that just now the commitment that is they need to pay every month for the credit card, for the personal loan, for the house, for the car loan, right? This when you tell the bank you want to consolidate, the bank immediately exclude the commitment because you want to consolidate, so you straight away pay, so you can exclude the commitment. So new commitment is added to current DSR calculation, so you make it harder to pass. You usually have cash in hand for refinance. Facilities to be consoled is excluded, like I mentioned just now. Excluded for DSR calculation. Of course, it make it easier to pass like that. So usually no cash in hand. But in some cases they are. If your DSR still okay, everything is okay, they can have some cash in hand. And most important factor here, most important factor is the property price must appreciate. If the property price not appreciate, you got no cash in hand. You want to do that consolidation also so hard. So let's move on to the frequently asked question. Okay, the first question: debt consolidation can get up to 90%? Yes, can get up to 90% depending on banks. But most of the time, as usual, it's 80%. The guidelines and refinance is nearly the same. Okay. Second one, can you consolidate and cash out at the same time? Yes, you can. You can consolidate and also cash out at the same time. Third question usually I get is, any way to avoid the 10-year stress test? Again, the answer is no. If you cash out, you cannot avoid 10-year stress test. Refer to what is 10-year stress test in my previous video on refinance, links down below. And if you want to avoid the 10-year stress test, you can. You don't cash out. You debt consolidate and don't cash out. You will avoid the 10-year stress test. Next question. Any free moving costs? What does free moving costs means here? Free moving costs here means free legal fees, free valuation. Yes, the banks do give promotions for free moving costs, but you need to check with the banks. Okay. Alternatively, you can actually appoint a mortgage broker, pass to a mortgage broker, and mortgage broker will check the best deal for you. Okay. Are all banks doing these debt consolidation services? Yes, most banks do. Even the non-bank also do. Okay. You just have to ask. Next one. This one is quite popular. If no property, can I still consolidate my loans? Yes. If no property, you can still do that, but you do it via personal loans. There is a facility for personal loans plus consolidation. You need to check with the respective banks. Personal loan plus consolidation. So if you were to ask me whether it's still worth it or not, because personal loan, right, the interest rate is high. So sometimes when you take a bit higher, the loan amount a bit higher, the banks will give you a lower interest rate, especially if you are working in MNC, working for a government. The banks love this. So the interest rate it can be lower than whatever loans that you have. Definitely it will be lower than your credit card, 18% per annum. So most of the time, right, when people do this using personal loan to consolidate, the interest rate, they would actually consolidate from credit cards. A lot of credit cards, then they consolidate to a personal loan easier. And also lower repayments, lower interest. Because they don't have house, so the personal loan is the next best thing. Okay? So it highly depends on what's your situation and what you want. Next one is, can I do debt concession to non-bank to get back my 90% quota? Yes, you can. The condition is always the same. You remove from secrets, I see only one housing loan, then I will grant you the 90% quota. So that's it for me for today. This is Kenny here from Property Stories. If you need our services, you can check out our services in the link down below. I've also just started a new Facebook group. You can check down below. And if you have not subscribed to the channel, do hit the subscribe button. Yeah. In this channel, we talk about real estate, personal finance, business, and financing strategies. This is Kenny here from Property Stories, and I'll see you again next video.